And we are live. Welcome to the Michael Jordan episode of the Risk Reward Show, episode number 23. My name is Chris Mercado, aka Mr. Risk. And as usual, I am joined by
Derek, Mr. Reward.
and we at the Risk Reward Show are always here to help you find the upside in your career, your professional lives, your business lives, and in your finances. As usual, we will start with our Risk Reward Weekly Rewind segment. And we just had some celebratory uh, happenings over this weekend. And part of it was getting some of our supporters, some of our subscribers access to a private theater rental so that we could watch F9, so Fast and Furious 9. And we wanted to start off with a quick review. So, Derek, what are your thoughts on what you saw with F9?
Um, to start off, I will say I am a big fan of Fast and Furious. My favorite one would probably be the first one in Fast Five. Like those are like my top two. This one, I feel like the Fast Nine series they dragged it out a little bit too much. But I will say on like the bright side of this one was when they were traveling to the different places. Like these were places that I've never heard of. So I was like, ooh, I should really look at like this place and stuff like that. Some of the scenes when they were in space kind of like really wild. Like I am getting like it's a movie, but I feel like those scenes were like kind of over the top. But all in all, it's a good movie for like a one-time watch. Like you don't, I mean, I don't think I'll probably watch it again, but it's, I feel like this one would probably be like my least favorite in the entire like Fast series.
Oh, so
How about
that's
you?
that's a strong opinion right there as like the least favorite. Uh,
Yeah.
there's a couple of the early ones that were not my favorite.
Hmm.
However, the over the top nature of this was a little comical and took away from it. However, glad to see Han is back and will be back next one because Asian representation is important. Also, I think he carries like an interesting storyline
Hmm.
that I hope continues and I would argue deserves a spin-off, to be honest. And
Yeah, the actor who plays Han is really really good.
yes. And I would also point out that the space scene was, although corny, it was timely. We can reference
Very.
our episode last week where we talked about the space race, and that's actually what came to mind. Our episode came to
Hmm.
mind when we were watching it. But overall, I was more happy with having a large crowd there. I wish we took more pictures um, because we had like various groups and networks that were in that theater
Hmm.
and they all fit the demographic of what we do at the Risk Reward Show. So for those of you who attended, thank you very much. And we hope to have some other group outings in the very near future, like maybe starting next week when I have a new headquarters for my
Hey.
business. So we'll get to that episode next week. Um, and then our weekly rewind segment also includes a couple of market um, happenings. So let's start with the Robinhood IPO, Derek. What are your thoughts on that?
Yeah, so this is so as I was going through my email, Robinhood now they have this new feature where you can get into these like companies that are going to go the public. So I saw Hood, I'm like, is this Robinhood? And by the way, I really like the ticker symbol Hood. Just I mean hood. I feel like that's where I'm from. So that's my reasoning behind it. But back to Robinhood itself. So
That is not good reason to buy any stock. By the way, there's there's like a biotech company with the symbol Chris spelled exactly how it's spelled. And I am so
ooh,
tempted. I was so tempted to buy it a while ago. I actually did buy it for like a short trade.
just
Um,
because.
but do not, well, it had some actually fundamentals that I was gonna try playing, but just
Mhm.
for everyone out there, we cannot recommend certain any individual securities. Like we do this to inform and to entertain. But one thing I would highly advise, don't buy anything because like the name sounds cool or the ticker symbol sound cool.
Yeah, so that won't be my reasoning for buying Robinhood when it comes out. But from what I was just what I really didn't read much about it. It was just from what I saw on the like the email that I am got, but some thoughts were going through my head. Um First and foremost, the range that they're probably going to come out is going to be between 38 and like $45. They're seeking a $30 billion valuation, which I think that's kind of low for them. I feel like I feel like they should be going for higher, but that's like just me. But some immediate like red flags that I thought of about them, doing this IPO is that they're so heavily I guess dependent on retail traders. So in a time like this when the retail traders aren't really, trading, or there's no meme stock to kind of just to really pump it up, how will that affect their, like their actual stock? Like will that cause it to go up? Will that cause it to go down? And knowing that, this bigger market is what their true focus is on, like I don't think that's a good like a business value if you only have one true, just like market. uh and another thing that I was actually thinking about was like their actual upside. I feel like for them, they are the retail traders app, so they can possibly be like the finance app for everyone. Like now they're doing stocks, but who knows if they're probably going to do like other things like insurance policies and stuff like that. So hopefully this isn't like the only stop for Robinhood, or like what if they become like their own like hedge fund or something like that. So these were like some of the upside thoughts that I thought of, but I did do a little bit of research and found something to be very, very cool. So Robinhood also does the cryptocurrencies, and out of that, 34% of their profit within cryptos comes from Dogecoin. So that just goes to show how crazy it really went from going to like point zero of a cent to I think probably like to 75 cents, and they made 34% profit off of that. So I think that like that's cool. But also I just remember you and I speaking about the fall is like kind of like the worst time, and like the end of summer is when people aren't really trading as much, and I think this is kind of like a bad timing for them to go public now.
Wait, hold on. Where did you get that Dogecoin number?
It was on I think Yahoo Finance.
Okay.
Yeah.
So I'm not always interested in IPOs. I think that the easy money came from the people who had invested before.
Always.
So I'm always going to be at a disadvantage. So I hardly ever buy IPOs right at the open or try to buy IPOs at the open. I don't have enough money in my brokerage account to be considered one of those quote accredited investors, which usually means $500,000. And as an accredited investor, you would have a greater shot at getting an allocation for an IPO, within that range, so that you don't have to do it after it comes public,
Hmm.
where you're pretty much chasing most of the time if it's going up. So that's not my thing. I definitely keep an eye out on when the lockup period is. So the date when folks who are in early have the first opportunity to sell. That's when I tend to look. So I looked into that for Coinbase and I did that for SoFi uh, 2 weeks ago. Made some quick money in SoFi, then sold, and I bought even lower today in SoFi. So I look for those lockup periods for IPOs, not for like right off the bat. So I'm not interested in Robinhood at all. In fact,
Not the hood.
um, the and I definitely come from the hood. Um, but what the timing point that you made, I think, is the best because today the market dipped. You'll see lots of red, 3 digits. The Dow was down. The Dow, so the indices, like the Dow was down like 900. Um, Nasdaq was down, close to 2%, and some of the other like small caps were down as well. So more than 2%. And what you said about timing, it's not just today, but seasonally, fall tends to be the weakest.
Yeah.
Um, and late summer, you get some doldrums as well. So valid points. I'm I'm sticking to my call from last episode. So last Thursday, we had a special episode on Thursday. I said, hey, I sold a bunch of my stocks and options. Part of it was because it's a busy time of year in terms of running my business, having to switch my headquarters. So I didn't have the time to really, uh, look at it day to day. So I sold for peace of mind. And I also saw some concerning trends on the technicals where I thought it was wise not just to sell, but I bought a hedge to my long positions. And I did that by buying options on the VIX, which is the volatility index. And I made a couple of $1,000s to offset any losses on the long. So today, when everybody saw red, I actually made $1,000
That's
with
what's up.
some of the things that I bought today towards early in the morning, but also with the hedge that I had from last week. I'm not telling anyone to follow any of my trades, right? Because again, we're here to educate and inform. These aren't recommendations for any particular security. I just make my moves very transparent so that we can all follow along and you can come up with ideas of your own. So it's my version of helping you help yourself,
There you
right?
go.
So that's how the weekly rewind, I guess, started for me today. So take a look at this market dip, see how you want to position yourself so that you can take advantage both on the downside, but more importantly, what we do at the show here, we help you find the upside. So hopefully you can make money off of this dip. And with that, that caps a pretty eventful, not even a full week, but eventful past couple of days. And the transition to our main topic is actually based on a couple of conversations and a question that we got about thinking about master's programs and like looking at our own journey. So there was a very popular article that was shared last week from the Wall Street Journal that talked about master's degrees and the amount of debt that certain people have piled up. There was also some reaction pieces from outlets like Slate, where this idea of a master's degree program was purported, or at least we asked the question, is it a scam? So, for background, I have a master's degree. So, this hits on that level. I also, do a little bit of college advisement when it came to my early career, but I still do a little bit of it now here and there. So, Derek, I wanted to get your take as someone who might consider grad school in the future. How do you view master's degrees programs in higher ed, and thinking about it as a scam?
So I'll talk about me first. Me specifically, I didn't want to do a master's program just because I didn't want to pay for it. That was my specific reason. I didn't want to pay for it, and I didn't feel like I needed it, especially with what I was the field of human resources, because I saw that in HR it's better to get like some type of a certification rather than that master's degree, and the certifications were 10 times cheaper than paying an extra 50, 60K over what probably like a year or two. But these the certifications were probably like a couple of $100, and I'm like, if I can do that, and therefore that lines me up to really make more money within the field of human resources, I was like, that's a better way. Like, that's just a smarter way when it comes to me just looking at my pockets. But with this article, I will say it really does seem like a scam. I feel like there was a show that I watched over the weekend called The Cars That Made America. And it was a great show because as crazy as it was, like, we didn't think that cars would be, I feel like when people think of cars like these are like these things that everybody needs, and like it changes and like it really changes the world and all that. But the business behind the cars was like really, really ruthless. And you really got to see that no matter what the business is, capitalism runs this country here. So whether it's cars, whether it's you just learning, if there's dollars behind it, capitalism runs it. So I feel like the article that you shared with me really exposed like these colleges in terms of just like, hey, like, we know that a lot of people can't pay back these loans. So, and and we're being paid up front. And if we're being paid up front, it's not like the onus is not on us. The onus is on the one who's loaning that, or trying to get like that loan. So, for the colleges, there's no risk involved really. They're just getting money. Their reports are probably trash, but they have the actual money. Another point in the article that I do want to bring up was that I feel like now that now that a lot of people aren't really going back to school, this is just my gut feeling behind it, but I feel like a lot of people aren't taking their masters as they just probably used to. But I think a lot of people now more are learning on like their own, or finding more like certifications. But something that the colleges are doing now is that they're working with like larger corporations to have their courses through these corporations. So let's say, for instance, if you're working for like a Google, I feel like they have their own, like a learning setup there. But let's say, for instance, Google wanted to work with like Yale. You could have people who are working at Google pay classes for Yale. So it's an easier way for schools to kind of get, or like tap into like another market. I feel like people always think that, hey, like, after you go, you have like, once you graduate high school, you go to college, there's bachelor's and then master's. But you find a lot of people are doing their bachelor's first, and probably like a couple of years later, then they'll go back and get their master's because they know why they need it. So the fact that colleges are taking that route, I think that's smart. That's a real upside for them, without having to go after the average person who probably can't pay back these loans. But I do think some laws are really gonna come down the pipeline onto how much money people can loan, based off of what the the income is, or what the projected salary could be within like this field. Because if you're going to be some type of doctor, you should, I mean, you, I'm pretty confident you'll make enough to pay back that loan. But if you're taking some type of like, you know, arts, uh and like the fact that a lot of people aren't hiring for people within in like the arts right now, I don't think you'll be able to pay back that loan like whatsoever. So like any other business, colleges are finding a way to kind of rip people off by, you know, taking their their whatever loans they, you know, make and stuff like that. So eventually I do think it's gonna come to a point where these colleges are gonna get some type of backlash. I feel like it's not happening now, but eventually like it really will, because once you start to hit people's pockets, that's when people start to get like really, really angry. And if, you know, people are taking out loans of like $40,000 to $50,000, but they can't, you know, pay it back, but colleges are still charging crazy amounts, I think people are going to start to look towards these colleges pretty soon and start to have some type of, you know, uh, policy towards how much people can take out. Hopefully.
So first off, shame on a lot of these educational institutions, for profit or even the not for profit big brand schools, including Ivy League schools, for marketing a lot of programs and courses that don't have great outcomes in terms of employment of the graduates from that program or the certificate holders of that program. And that leads me to one other big issue: the transparency of outcomes for graduate programs is not as good as the outcomes for undergrad programs. So if you go to New York University, Harvard, and their websites, you can easily find undergraduate admissions statistics, what median SAT scores were, demographic info. So how much of the incoming class or how much of the current student body is of a certain race or ethnicity. And they'll have graduation outcomes. By the way, the stats that you see for undergrad are not for 4 years. They're actually for 6 years most of the time. So read the fine print. So, you know, most of us don't intend to do undergrad for 6 years, right? But they have to extend it because the outcomes for 4 years aren't that great. So keep that in mind. And when you think about that access on the undergraduate statistics, you know, you'll see graduation rates. You won't find it as easily and in master's programs. So that's one fix that needs to be addressed. And this was also brought up in that Slate article that we can link to as well. But when I think about the original article from the Wall Street Journal, and when I think about these master's degree students, and it was a bit centered on Masters of Fine Arts program, Masters of Fine Arts programs. So when I think about the job prospects of art students and the idea of taking on that much debt, and what I had mentioned earlier about the really marketing without any sort of conscience by these schools, you know, that was to imply that, they charge high tuition. Like these are highly profitable programs. That's why they're marketing so hard. So when you keep that into account, I I start to wonder like what is in your mindset as a prospective student that would make you say, "Oh yeah, that's a good deal for me." Literally, anyone who made that decision and didn't have the safety net, the financial safety net, to be able to handle 50, 60K of debt a year, which not long after might result in 200, 300K of debt. What in your risk reward calculus made you think that that was okay? And this also ties into why I never recommend follow your passion. You know why? Because some of these folks followed their passion straight into 200, $300,000 of debt.
Passion's expensive.
This could have been avoided with a great deal of risk reward forethought in the beginning. Also, we had mentioned this in a previous episode regarding just going to college in general. A lot of the reason why young professionals don't make the most sound decisions in terms of what college they want to go to or like what grad programs they want to go to is because in high school, there's a large uh, discrepancy in the student to counselor ratio. So folks aren't getting the advice starting from high school. If these thought patterns and decision making opportunities aren't addressed in high school, who's going to address them in college when there's like one advisor for thousands of students? So they're never going to get that one-on-one hand-holding help unless there's a mentor that looks out for them to make these big decisions. So there's a confluence of factors going on here that in the long run leads up to these what I would call tragic stories of debt that I don't think deserves forgiveness on its own. However, for the economic value of forgiving some student loans so that young professionals can live like like I guess live in and perform the normal adult trajectory. So like starting a family, buying a home, like all of that has been delayed because of this debt. So if you want to forgive some debt for the economic plus of, okay, they don't have this hindrance anymore to start a family and to, buy a home, I can see that argument. But on the sheer idea of someone making this quote rational decision that yes, I'll do a master's program and I'll take on this much debt, the student deserves some blame. The schools deserve a lot of blame. And the government, which we pay for and is supposed to protect us, deserves blame for not passing regulation that limits loans. Like literally, it needs to protect us from ourselves or some of us.
Yeah.
But that's what we pay the government to do. So do your job, government,
Uncle Sam.
because we pay for it and clearly you're not protecting us from ourselves.
Yeah. Um, Something I'll add to, I mean, I hear what you said, how it's on the school's fault really because they're not really teaching students about or just giving them the knowledge that they need when it comes to these going to take your masters. But
Wait, hold on. That's not the school's fault. So as early as high school, some of these
high
ratios,
school, yeah, yeah,
yeah, we pulled it up. It's like 600 students to one counselor
yeah,
in some cities. So it's not the school's fault. That again goes to educational administrators, but
mhm,
also local and state government policies.
yeah. So for them to have that structure like that, it's hard to manage 600 people with one person. That's just crazy. So for them to have that type of just like structure there, I think that's going to be made to fail. But something I will say is I feel like for me specifically, like the older I get, the more I understand like how money works. So and how you should invest. I feel like if you get your master's, that's like an investment, like a really big investment. If it's over like 20K, that's something that you need to really like think about. And I feel like a lot of first and foremost, when it comes to having like any asset, I think you should always have like an asset pay for like another asset, or an asset pay for, just have something to pay for something. So like for instance, you should, if like you're working and you have like payments for like your school, you're working there, like you working should be able to pay for those payments. And another thing, you have these companies that are, paying people to go back to school. So rather than you fronting that money, it can come from, whomever you're working for. I don't know if companies are still doing that now, but I think that is one of the best options if you are working and you want to think about going for your masters. See if your company can pay for it rather than you. If they, I mean, they probably won't pay like the full thing. They'll probably pay like a piece, but paying some of it is better than paying, all of it. So I would say that too. But for me, it's just I feel like people are taking these masters programs just because they think it's going to like really work out, but I don't think they see like the money play behind it. In terms of like the government is funding these schools, you know, your loan could be for like 40, but you're probably paying probably about like 60. So not thinking about that extra stuff, like you really got like if you're going to budget for 40, you just forgot about a whole extra $20,000. So
Of
now,
interest.
yeah, so now like you're just stuck. So I think it's more along the lines of understanding the financial piece within getting your masters. That's like the part that's missing too.
So what I'm hearing from you is education is not just a learning decision, a social decision. It's an economic decision.
Yeah.
Duh. Everybody like when like for me like you it's almost like there's a sense of privilege or entitlement that might get in the way of people actually thinking about the financial aspect. And it like in this way, it's almost better that some of us did not come from rich backgrounds or had not like we didn't understand wealth around us because we had to make finances a central part of our decision making process in going to college in the first place. So maybe that was helpful for us. Derek doesn't have debt. Derek doesn't have school debt. I don't have it either. So I really did not understand that those stories of some folks accruing six figures in debt. Um, like you didn't have to go to a private school. You could have made the choice to go to a public institution and save tons of money. All right. And then on the back end to be like super regretful about it and ask for loan forgiveness. Part of that is it rubs a lot of people the wrong way, maybe myself as well.
Mhm.
But I will definitely 100% say that the skyrocketing costs of college and how much they've been pushing certain programs is the bigger uh, source of blame for this issue and like the broader debt issue. I will mention quickly though. You said 20K is a lot. It's not a lot for rich folks. So if you're not rich, if your family can't cover you, if you don't have that safety net, then it sucks, but you probably can't do it. And the government didn't step in to limit how much you could borrow to prevent you from doing it. Because that
Yeah.
kind of regulation is also telling you you can't do it. And that doesn't mean you can't ever do it, but maybe for that moment, you got to try something else. And maybe grad school wasn't it. You can't be hiding in school. You kind of have to go and maybe find a job, start a business, find some other way that won't actually help you accrue debt, but actually, maybe earn some income, even if it's not the ideal situation for you.
Yeah. Yeah, I mean, are we about to cancel colleges? Like, is that going to be like the new like cancel culture?
So,
Evicted
some colleges
colleges.
should, some colleges should be canceled. For-profit ones, for-profit ones that have horrible outcomes, which is I'm not gonna say almost all, but the overwhelming majority of them should be canceled. They
Yeah.
shouldn't exist.
Yeah,
So
and then the fact that they have schools that are showing the reports over 6 years, not four, like that should let people know, like, life happens, and you probably can't really focus on school like as much as you want to, like just because of like just purely just like life. But I think that's wild too. The fact that they're showing like what's like when did we come with the standard that a bachelor's takes 4 years?
I don't know, but it was really the credit load. So 30, 30, 30, 30.
Gotcha.
Like that should have
Okay.
120. And then 15 per semester. And then per class is about 3. Can you handle 5
Mhm.
classes? You can handle more. I took 18. I tried to, get one semester off. So maybe 3 years. I've seen it done. I tried to do it in
Mhm.
3.5, right?
Mhm.
Um, and that's how you get a normal, decent workload. The 6 years part is because they want to make the numbers look good. For some community colleges, if they put out graduation rates, and 2-year colleges are generally community colleges, if they put out 2 years data,
Mhm.
um, you would see, I've seen some of them 2-3% graduation rates. Who would want to go to a school where only 2 to 3% graduate when they're supposed to, right? So they have to elongate that. Undergrad admissions is the same way. So that's why they extend to 6. And then maybe this is an indication of how bad some of the master's programs are. You just can't find that data.
Yeah. I know you're very big on saying that, colleges, like they're losing like their like the learning
Prestige.
part. Yeah,
Oh,
like the learning part of it. Like learning isn't fun for people. So do you feel like more people are going to get their masters in hopes of getting a higher salary, or in hopes of, you know, taking their learning to that next level?
so a few things there. I think people go into their masters, one, to kind of earn a higher salary. But the thing is, and we'll get to this to address the specific admissions questions that we got. A master's in fine arts, a master's in psychology and like the social sciences,
Mhm.
that's not going to be a huge bump up in your pay. And maybe if colleges were more transparent about this, it's also hard to collect this data. employment data after, for your alums, if they were more transparent about it, people would see, one, oh, there's not a huge bump up in many master's programs. But that would mean that the colleges would lose money. People also go to master's programs to add prestige. So one, the program itself, in a master's program of, criminal justice. Or let's say you went to a community college undergrad and then you went to a senior college, but that was small, no one knows about. Well, going to a master's program at a big school like a Harvard, like a Columbia, that is your opportunity to get into that network,
Yeah,
right? So
yeah, you're just paying for a name.
you
I feel
couldn't
like
do it.
that.
You couldn't do it as an undergrad. So now you're gonna try to do it as a master's in a master's program. That's fine. You're not getting a whole lot of money from that school. What colleges do, they'll be the most generous as an undergrad, not even as an undergrad as a whole, that first year, because that pulls you in. That's why one of the pieces of advice that I have for undergraduates is, and like high school seniors, try to find out what sources of funding from that first year gets renewed down the line. Because now, if it's not being renewed, then you have to find other sources of money if your tuition isn't being paid for. Luckily, large endowments have covered folks who are under a certain income threshold. And again, we covered that in a previous episode. So they've done a good job on the undergrad side. They don't do a good job on the grad side because you're an adult. As a master's program student, you're generally going to be older. You're more likely to have a family. You're more likely to be in this time in your life where you're thinking about purchasing a home, so hard assets, or more inclined to have money in the stock market, right? So those are things you have to figure into your financial decision or the financial portion of this, grad school decision. Um, and I think folks should do a better job of really bringing in the financial aspect of this and being more pragmatic. But I think this is a good transition to the open office hours question, because we'll give our hard advice on college grad admissions. So one question that we got is, what do you think about going into a master's program right after graduating from undergrad? What's your take on it?
Right after, I think you should wait. Reason being is because you have your bachelor's, you have like that knowledge. What can you do with it so far? I think you should really put yourself out there before you jump into like another program. Because let's say, for instance, you do your bachelor's, you try something out, and then you figure out like, oh, like I really don't like this, and now you're really stuck in like that field. But I think you should at least wait and make sure that, one, you need a master's, or a master's is something that's necessary for you to actually do. Like if there's no promise of more money, or like some type of like just something bigger, I really don't think a master's is like really worth it, unless within your field that if you get a master's you're guaranteed like such and such. I think you should really take time to wait, try things out, put what you learn to the test. So if you have a bachelor's in whatever, just try to work like around that, and see what could do. And within like probably like a year or two, if you are working, I'm pretty sure you'll get a better sense of what exactly you would want to do next, because it may start off to see it may start off to be one thing once like you graduate. But after you have like that working experience, you start to realize like, oh, like I like this specific area better, like not the broad area, but I like this thing more than anything else. So me personally, I say wait.
Okay. So first, I will give the broader context. You had alluded to this, Derek, but here's my general take on education in general, post-secondary institutions more specifically. The first is, because of how technology has affected the number of options in which we can get knowledge, as well as the shortened attention span that's encouraged with the technology we're exposed to, and the social inequality that we see in this country. A large amount of people in colleges right now are not there to learn for the sake of learning and simply acquiring knowledge. They are there to acquire the credential and some very specific skills so that they can get a job. Essentially, they are treating college as a job training program. And the sooner that post-secondary institutions realize that, the better they can serve the students on their campus, the better they can retain those students, and the more likely it is that they will survive this very scary and transitional period for the education industry as a whole. That is my large take on education. Within that, well, with that in mind, I will give my advice through my own story. So, one, if you want a master's degree, there might be some special programs within your school that can help accelerate that. I know at City College, I came in as a psych major, but before I would reach 60 credits, I had I could have applied, and I did apply for a combined bachelor's master's program while I was in undergrad. So I applied for the program and I got in. So as early as junior year, I was taking master's levels courses.
There you go.
Right. So that would shorten a normal, 4 years undergrad, 2 years master's degree. That would have cut it by a year. But I decided to up it, I guess outdo myself or try for something bigger. The only reason I left that program, I was taking courses like psychopharmacology when I was a junior, right? And that access was great. It was really challenging. That was great to me. But I was taking courses that the master students were with, right? And I was doing it as a shortcut. So prove that you're excellent in handling your courses. Try to see if there's an accelerated program as an undergrad where you can squeeze out a master's degree. But I decided that, you know what, I want something bigger. So I went for PhD study. That's why I didn't get my master's degree in psychology, because I went for a bigger program. I was like, let me get my bachelor's and let me just go get a PhD. I went for a criminal justice program. But what I did was I selected a program that had an en route master's option. Literally, along the way to my PhD, could I leave with a master's? Yes, those are the programs that I applied for. And my master's degree is a result of taking doctoral classes, right? So it was a backup for me, and that's what I got. And despite immigration status being a barrier throughout much of my life, I have no debt because I tried to do as well as I could in those classes. I applied for everything. I made contact with provosts to try to see who had some, money hidden in the back that could like help me out. And trust me, if you can prove that, you can add value to your program, like they'll find some extra money for you, right? So That was my journey. So my advice to you all is, again, if you're thinking about master's degrees programs, first think about what type of master's degree you want. If it's an MBA, yes, all the way, 100%. However, if you're going to do an MBA, make sure that it is from a first or second tier school, generally one that's going to have a brand name, because that will provide you the most value. You'll also have the most robust network for the rest of your life because of going to these relatively elite schools. If it's not an MBA, if it's like a master's in psychology, master's in philosophy, master's in creative writing, I'm going to tell you no. If you, instead of a master's in creative writing, how about you write?
Just right. Yeah, for real. Just right.
Publish. Right? If instead of a master's in philosophy, how about some thought pieces across various publications where you can get your thoughts across? There's no need. That's not going to be super marketable for you when you're out there looking for a job. So if it's not an MBA, if it's not a JD, if it's not a PhD, if it's not an MD, I'm going to tell you, you might as well be an actual practitioner in that field. A master's in criminal justice doesn't do a whole lot. In fact, a field like criminal justice is more practitioner generally, which means get out there and get a job related to criminal justice. When somebody tells you that something is more practitioner based, right? And that also informs like whether or not you should get work experience beforehand. So generally, if you're going for your MBA, a couple of years of experience. So there's a bit of practitioner bias for MBAs in the field of criminal justice. I was the baby in my program, 21 years old, no experience in criminal justice. And for the first year, it was hard for me to contribute as much as I could because I was soaking everything in from what actual practitioners. My classmates had guns. My classmates were FBI agents that would fly in just for class and have a gun in their holster. Right? So certain programs are very practitioner based. So you have to keep all of this in mind. But the reason why I advocate, go for that higher degree is because for a lot of these programs, there's an en route master's option where you can leave early in case you figure out it's not for you, but also the money is going to go to those PhD, JD, and MD programs.
I feel like we gotta have like another convo about you and your criminal justice classmates.
I'll definitely add that. But it sucks being in the middle. Like being in a master's program is in the middle.
Yeah.
Right. So avoid that middle. Child. Yeah. Avoid that middle and either get your degree early on so that you can work and get that experience, or go for that super high degree where you get instant rewards. Well, almost instant rewards as compared to master's programs.
Yeah. Just really quickly, I'll just add it again. I know I said it before earlier, but just to back up my point about waiting, like I said, you have companies that will pay for your master's for you. So they will front the money for you to go. So that's why I'm really big on just waiting. I feel like you should take your time, but also know that other people are out there to front this money for you.
Great point. Great point. Yeah, I forgot to mention that, but yes, get other people to pay for your education. And if your parents can't do it, company can't do it, maybe you shouldn't do it. That doesn't mean you're a failure. That might mean that you can leverage your skills for something else, whether it's starting a business or getting out there and getting that first or second big job. So with that, we'll transition to our last segment, the right move right now. And for me, my right move right now is a continuation of my advice from last week, which may have saved you some money with today's dip. I would wait for a bump up to sell. Well, how about this? I'm waiting for a bump up to sell more stocks and options, including the ones that I bought today for a quick trade. Because in the long run, the way I'm positioning my portfolio is higher quality stocks, maybe less risk on the option side, because this is not the best season for trading and investing. So keep that in mind. Yeah, that's my right move for right now.
Okay.
You still have an opportunity to sell some more, but I would not go super hard in buying stuff.
It's not that time. For me, it'll be dollar cost average. I feel like regardless if it's a down market, a good market, if you believe in what you believe in, put in like $100 a month, $200 a month, whatever you can, because you never know whenever it's going to just like shoot up. And this game of playing with stocks is a very long-term game, so don't even worry about it. Just put it in there and forget about it. But dollar cost averaging, that's what I'll say, because that's what I've been doing ever since the market.
That's a great point. That's a great point. If you're hands off, if you're not worried about timing, yeah, dollar cost averaging is the way to go. So that is a great way to wrap up. So solid episode. We gave you 2 episodes in a span of 4 days. That might have actually cost not that might have actually saved you some money if you had paid attention to the Thursday and maybe this episode. That might save you some money, and also some of our advice here in terms of master's programs that might actually save you some money as well down the line. So
trying to help people save money, yo.
That's right, because that's what we do here. We help people find the upside. Please continue to share, subscribe, comment. I'm sure that a lot of you have strong opinions when it comes to graduate school, debt. So we're looking to field all of those questions and responses. We'll try to address them. And again, we reward our supporters or subscribers.
We're 31 strong.
Time to time. But yeah, we appreciate your support and we hope you continue doing so.
Awesome. That's a great way to end it. Next week, same time, same place, different conversation.
That's right. Mondays, 5:30 Eastern time. See you all.
All right.